Hi and welcome to the weekly market update. It is Tuesday the 14th of May 2013. Okay, so from the markets yesterday, the focus was really on the US. We saw retail sales data out from them. Came in much better than expected. I think they're expecting a slightly weaker reading. There's a possibility that that payroll tax may have had an effect on the consumer, but it doesn't seem to, and we still saw a good reading for the retail sales there. We also saw US business inventories in the afternoon. Stocks remained pretty subdued yesterday after continuing to reach new time highs last week. However, we did see some strength in the dollar yesterday. In terms of data today, we've seen early this morning CPI data out of Eurozone regions, Germany, Spain and also Italy, but the focus really on the industrial production reading that we've just seen, coming in better than expected month on month there, and also the ZEW surveys. These are quite closely watched throughout Europe. For Germany, we saw it coming in slightly weaker than expected. However, the reading for the Eurozone actually came out much better than expected, so that's good, seeing some positive sentiment throughout Europe. So that today leaves us trading with the FTSE around 66.25 mark. We've got the Dow around 15.033, the euro dollar at 1.3017, cable 153.13, gold future around 1435.80, and the Brent future around 102.72. Okay, so for the rest of the day, pretty quiet in terms of data. Just got US import prices out this afternoon. Big day is really tomorrow, so into Wednesday. The focus in Europe is going to be on the GDP readings that we're seeing coming out. We've got the readings for individual regions, largely expected to come in negative apart from Germany. Expect to see a positive reading there, but unfortunately the consensus is not that this will be enough to pull the readings for the Eurozone as a whole into positive territory, so expecting the Eurozone GDP to be negative. From the UK, we've got employment data out, looking to see sort of initial jobless claims, and also the rate we've seen a fall in employment from the last reading, which was actually the first time we've seen that since September 2011. So looking to see if that continues, to see if we see further weakness in our employment data. Another point to watch out for with the employment data is the average earnings. We've seen consistently pay fall below inflation for like the last 5 years nearly, and this is putting a strain on households and obviously might hinder the recovery. So interesting to watch the relationship there with the inflation and the average earnings. So following that, we see the quarterly inflation report from the Bank of England later in the morning, and this is the last one that King will deliver before Carney comes in July, so watch out for that. And then the US tomorrow, we see in the afternoon they bring out Empire Manufacturing and also their industrial production data, again searching for more positive data out of the US. We also see a PPI reading from them, so a bit of inflation data. Into Thursday, we've got Japanese GDP coming out overnight. We saw a flat reading for Q4, so expecting this time a positive reading. Consensus is around 0.7% for Japan GDP. From Europe, we're seeing consumer price inflation data and also a trade balance figure. And then in the afternoon, we've got the US, we've got some CPI data from them, also some housing data, and then as we do every week, we get the initial jobless and continuing claims. Last week's initial jobless reading was actually the lowest that we've seen since 2008, so really positive for the US employment picture there. And then in the afternoon from the US, we see the Philadelphia Fed, another sentiment survey there. Into Friday, a pretty quiet Friday. We've got EU construction output, we've got the LTRO repayment, the announcement of that from the ECB, and the US University of Michigan, another confidence survey. I also wanted to just touch on China. We've seen some weaker data from China recently. We saw weaker PMI readings last week and a few weeks ago. And then we've seen this week a slowing of industrial production. We did see retail sales come in line with expectation, but overall the picture is a little bit worrying coming out of China. And we've actually seen talk of the government revising their GDP growth forecast, or their growth forecast, sorry, to 7% for 2014. China is the world's second largest economy and has actually seen growth of averaging around 10% for the last 3 years. So to revise it down to 7% is quite a large drop for them. But it may just show that the government is sort of coming to terms with the slowing and calming down of the Chinese economy. So just something to watch out for there. Okay, that's it for this week. As usual, any feedback, much appreciated. Thanks.